Hello everybody, it's Isaac Durgis, your mortgage professional, and I'm going to talk to you today about how to calculate your maximum mortgage approval. So what is the maximum mortgage amount you qualify for? So when you are getting a mortgage, there are two main ratios that the lenders will use. The ratios are called GDS, stands for gross debt service ratio, and TDS, total debt service ratio. So these two equations or these two ratios are based on the affordability of the mortgage based on your income. So very quickly, I'm going to go through how GDS is calculated. That's the first part. So GDS, basically what we use is an equation, and it stands for PITH, P-I-T-H. So the P and I stands for principal and interest. So that's your mortgage payment that you're going to be making. T stands for your taxes, and the H stands for the heating. So PITH, P-I-T-H, is your principal and interest plus your taxes plus your heating. And if there are any maintenance fees, if it is a condo or anything that has maintenance fees, we will usually include half of that amount in that first equation. So remember that part. The next part is we're going to take basically your actual income, so your gross income. So for example, if you're making, for example, $80,000 a year, you're going to take that original equation of principal, interest, taxes, and heat, plus half your maintenance fees, and you're going to divide it by your gross income. Now, when calculating what rate to use to qualify on that PITH part, the principal and interest, currently the banks are using 5.25% as your qualifying rate. So remember, if you are calculating this quick equation and you wanted to figure it out on your own, you take the 5.25% interest rate based on the mortgage amount that you're looking to qualify for. Now, the standard procedure are basically if you have a credit score of 680 or above, on GDS of this ratio we're currently calculating, your mortgage payments, the debts, mortgage payments, principal, interest, taxes, heat, and maintenance fees divided by your gross income cannot be more than 39% of your gross income. Based on you having very good credit, that would be called an extended ratio. In many cases, usually the lenders like to stick to 32% of your gross income on GDS. But if you do have good credit, you may be able to qualify for an extended ratio of 39%. Now, the next ratio is TDS, so that's total debt service ratio. So what that is basically exactly as GDS is. So we've already discussed how to calculate GDS. But when you're factoring into that first line of the debts of the property, you're also going to factor in all your other debts. So any debts that are reporting on your credit bureau, such as car loans, credit cards, lines of credits, anything that's a debt in your name will be also factored into that equation. And this is why it's called your total debt service ratio, because now it's accounting your mortgage payments, your taxes, your heating, potential maintenance fees at 50% if you have maintenance fees, plus all your other debts divided by your gross income. And with this number, usually, let's say you have a fair credit score, the banks or the standard lenders would like to stay at 40% of your overall gross income. So those debts not to exceed more than 40%. But if you do have a credit score of 680 or above or very good credit, the lenders can usually make what's called extended ratio exception up to 44%. So basically on GDS, your maximum usual GDS ratio cannot exceed 39% of your gross income. So that's gross income before your tax deductions. And on TDS, you usually cannot go past 44% of your gross income. These are the standard, ways of qualifying a mortgage. This is the way to tell if you qualify for something or not. But in every scenario could be different. We do have some lenders that could potentially go past those ratios in certain circumstances. But what I wanted to talk to you today about is the standard procedure of calculating your maximum mortgage for basically a standard mortgage product. So I hope you found this information informative. If you like the information, please feel free to like, share, and subscribe with your friends and family. And if you ever have any questions, please feel free to reach out to me directly. And I wish you luck on your mortgage journey. Thank you very much.